Hi everybody, this is Ospreyeye from mychartcoach.com, and we are looking at ticker symbol ASTI. Okay, ASTI had this really nice move on Tuesday of last week, and bullish one white soldier reversal pattern formed on very strong volume, and then that was followed by this big gap up open the following day. This was the open on Wednesday. And what happened was the share price, ran to 28 briefly and then pulled back, and the share price was under pressure the entire day, forming this solid green candle, which we call a black candle. And what we pointed out in a previous video was this candle here forming above the upper Bollinger Band at 18 signaled a frothy move, signaled that the share price was getting ahead of itself, because the candles always work their way back into the Bollinger Bands, and that's exactly what happened on Thursday. This big red candle formed with the close below the upper Bollinger Band and tested the EMA 4, and then on Friday EMA's 4 and 8 support broke. So that puts the middle Bollinger Band on deck, which this lower wick on Friday's candle tested the middle Bollinger Band at 14, and so that's the key level to hold and to form the bounce. We'd like to see a bounce off of the middle Bollinger Band at 14 for stocks that, okay, so what happened was this middle Bollinger Band was resistance during this downtrend, and as you can see, it broke here, but and it broke here, but it failed to close. ASTI failed to close above those levels, so so the downtrend continued. So you have this close here above the middle Bollinger Band, and then you have a close here above the middle Bollinger Band. But as you can see, look, the following day a red candle formed, the downtrend continued. Okay, the following day a red candle formed, the downtrend continued. Well, there was this bullish change in trend in December here, where there was this another close above the middle Bollinger Band. All right, so that makes 3 closes above the middle Bollinger Band here in the last couple months, and that this is showing you that ASTI is trying to turn this middle Bollinger Band into support. The reason why this line is so important is that the middle Bollinger Band is also the 20-day moving average, simple moving average, and the candles that are forming below the middle Bollinger Band 20-day moving average are in a downtrend. Okay, and then when candles are forming above the middle Bollinger Band / 20-day moving average, the candles are in an uptrend. So right now, ASTI is in the process of trying to start a new uptrend. Okay, so what happens is when resistance breaks, like it did here on Tuesday, it needs to be tested. In order to head higher, we need to make sure that this middle Bollinger Band is a support level, and that's what's happening right now. It's being tested. Okay, so this is the line in the sand, 14. Bulls, you want to see it hold on Monday, 14, and candles form above that level to signal that a new uptrend is actually starting. Because as long as middle Bollinger Band support holds, a new uptrend should continue. The new uptrend that started on the first trading day of December should continue. And so if it breaks and you see candles form below the middle Bollinger Band, that's going to signal this downtrend will continue. So it's the line in the sand. It is also our level to reload after a bullish move. So yeah, so the theory is you got in on this day here, and then you exit on this day when the chart was breaking down and this black candle was forming, and there was this candle above the middle Bollinger Band that was telling you that the move was frothy. And then the key now is we've been looking for the reload level, and reload now would be at 14 middle Bollinger Band support, as long as that level holds. If it breaks, then that will equal downside risk, and it should continue the downtrend. Okay, let's look at this next chart. This next chart is this is the last chart that we posted. This is I took the annotations down, but this is another daily chart, and this shows the 50 and the 100-day moving average. Also, the 200-day moving average is on here at 57, but you can't see it. So what happened was on the second day of December, back here on Wednesday, there was this close above the above the 50-day moving average, which is this green line, and the 50-day moving average has been the key level for ASTI to turn into support. As you can see back here in September, there was a close above, and then it failed to turn that level into support, and the share price pulled back. And then once again, there was another similar move. So you have this candle here, broke above the 50-day moving average. See, there was this test here, and it didn't happen. The upper wick tested, didn't happen, pulled back, and then you had this close above the 50, and then the share price finally closed below that level, was unable to turn into support, and a pullback followed. And then you had another candle right here that once again closed above the 50-day moving average. That level failed to turn into support. The downtrend continued, and then you have these upper wicks here. See, there's an upper wick here. Tried to break the 50-day moving average, did not happen. The pullback continued. And then here on the first trading day of December, the 50-day moving average broke intraday, but the share price closed below. And so as we posted that evening, that's what we'd be looking for, is a close above the 50-day moving average to signal more upside potential. And then there was this giant gap up open. So this is the open way up here. So you had a close down here and an open way up here. This big gap is crazy frothy. Gaps are cool if you're holding overnight, but if you're in the trade for a swing trade, or you're looking at it more longer term, you really don't like to see giant gaps like that, because the saying is gaps get filled. And that's exactly what happened here. The open was here, and the share price came down, and this was the top of this was the bottom of the gap. And once the share price hit the top of this wick here, the gap was filled. And so basically, what happened was there was a close above the 50-day moving average, because this candle is the close here, and ASTI is in the process of trying to turn that level into support. Okay, on Thursday and Friday, ASTI closed below the 50-day moving average and entered back into this channel. As you can see, there's this downtrending channel. So now, unfortunately for the bulls, the candles have worked their way back into this channel. So what bulls want to see is they want to see a bounce. Okay, they want to see a bounce off of this 14 level, and they want to see candles forming back above the 50-day moving average, and they want to turn this red line here green. They want to turn this into support. See how this was the top of the downtrending channel? What bulls would like to see is this become the bottom of a new uptrending channel. So they'd like to see this red line turn green. As you can see, I changed it green for you. So that's going to be the line in the sand on this chart. Bulls, you want to see the 50-day moving average at 16 resistance level break. A close above the 50-day moving average should be the bull signal that the 100-day moving average at 20 it will be tested. And then going forward, okay, so there's two steps that need to be made on this chart. There needs to be a break above the 50-day moving average, and then a break above the 100-day moving average with the close above, and turn that level into support. And then if that happens, that would end up putting this 200-day moving average at 57 on deck. So there's some positive developments going on with the chart here. The pullback was not good, but if you're a trader, you shouldn't have been holding during the pullback anyways, because there were lots of signs telling you to take profits and reload lower. Okay, and one of them was this giant volume bar here. When you have, if this candle here closed near high of day and this was a solid white candle and there was giant volume, it would look bullish, right? You'd be like, oh my God, there's lots of people loading in the stock, and it looks like it's going to head higher, possibly make a run to this 200-day moving average. But since the share price pulled back throughout the day, this is telling you there were sellers. There were profit takers from 28 all the way down to here, and all the way down to the close. And this giant candle right here, this is a huge candle. This is telling you that this giant volume bar is telling you that there was lots of dumping going on, because you had this huge pullback from 28 all the way down to 19. And so that's telling you there was lots of profit takers, and that signaled more downside risk, and that was followed by red candles. So yeah, the chart is really broken down. There are some positives. You have Fasto here at 20.48. Now it's hitting the 20 oversold line, so there's lots of juice to run until overbought on Fasto. And then RSI here has dropped below 30 or below 50, and so now it's below the bull zone. So bulls, if you're trying to, in the future determine whether or not ASTI is building strength, what you want to see is RSI above 50. with this bullish move here. See how RSI broke 50 here? If RSI gets above 50 and you see it maintaining above that level, that will be another signal that strength is building, and that will probably reflect an uptrend, the uptrend that is starting. Okay, so let's look over here at the next chart. This is a 15-minute chart, and this chart is showing the descending triangle pattern that formed over the past 3 days. So there was this breakout here on the first above the middle Bollinger Band. The candles ran all the way up here to 28, and then there was this pullback, and as you can see, it formed this triangle. This is a descending triangle pattern, and so right now 14 is the key support level. As you can see here, it was 15 was the key support level. It broke, and the share price dropped down to 14, and now 14 is the key level to hold. If it breaks, that's going to drop the share price down to this next support level, which is going to be down here in this 13 range. So bulls, you really want to see 14 hold. As you can see, the share price consolidated to the and started trading sideways to end the day on Friday. So this descending triangle pattern has been broken and turned into a sideways trending pattern. And so what bulls would like to see is 14 hold, and then an uptrend follow, and a new pattern to begin. So there is room to run on Fasto and RSI. As you can see, they're both below 50, and down here, there was really big volume back here on the first and the second, but it's really dropped off, and that could be a good sign for the bulls that the sellers have tired. So at least the selling pressure has died down. Now what bulls want to see is they want to see buying pressure increase. On the third, there was this bullish crossover here on MACD, and then MACD has been slowly trending up since then. So that's a good sign. Bulls, you'd like to see the MACD line turn positive and continue this uptrend. Okay, now let's look at the last chart here. The last chart here is another 15-minute chart. And this is showing the 50, 100, and 200-day moving averages. This is just a 4-day chart. And what this shows is on the first, there was a break above the 200-day moving average here, a close above, there was this break above the 50, 100, and 200-day moving averages. They turned into support, and this big run followed. And then that level was tested on the second into the close, but the 50-day moving average broke on the third. And like we said, if that breaks, that would put the 100-day moving average on deck, and that's exactly what happened. The 100-day moving average was tested, and then on the fourth, the share price dropped all the way down to the 200-day moving average, and that's currently at 0.146. And so just like the 50 and the 100 and 200-day moving average act as key resistance levels on an uptrending stock, and they are levels to break, it's the same thing on the way down. They act as key levels of support, and they're the key levels to hold on a pullback. So what you have now is this key 200-day moving average being tested, and that is at our number that we're looking to hold. It's at 0.146, so it's in that 14 range. And so we have confirmation on multiple time frames that 14 and multiple charts, that 14 is the key level to hold. Okay, so it's the line in the sand. If that level holds, there should be the uptrend should continue that it started on the back here on the daily chart when the middle Bollinger Band broke. That should begin, and then a new uptrend should begin on the intraday charts, on the 15-minute chart, because you can see there's this descending downtrending channel, and so we'll be looking for candles to hold the 200-day moving average, break the 50 and the 100-day moving average, and then a break above this 100-day moving average at 16.9 on the 15-minute chart should be the bull signal that the chart is strong again, similar to down here on the first, and that could signal a possible another run and continuation of this uptrend here. What we'll be looking for is this: if EMA's 4 and 8 resistance break, we'll be looking at 18 as the next resistance level of the upper Bollinger Band on the daily chart. Okay, thanks for viewing these charts. I like to get in depth with the technical analysis, and the videos can be a little bit long. I will try putting out some short videos for people, just giving like a quick recap of the stock and just the rundown. What I'm trying to do with the videos is not only provide interesting ideas on interesting plays that have potential for profit, that are good setups, but also I'm trying to teach you how to read the charts, how to analyze the charts, and how to interpret the charts on your own, so that people that are learning, or intermediate chartists, can take their game to the next level, and then be able to analyze charts on their own for quick analysis that will really help your trading in the future, because that's what it's all about. It's all about being able to analyze quickly in order to make your moves, ahead of the herd, because it's all about, who can decipher the information the clearest and the fastest in order to anticipate future price movement. So that's what it's all about. It's about anticipating future price movement, and the key is to try to do that ahead of the competition, ahead of the herd. And one of the key tools in your belt is technical analysis. All right, thanks for viewing this chart. Please check us out on our YouTube channel at mychartcoach.com, and at our website at mychartcoach.com. Thank you.